Good morning, people. Morning, morning. What do we got going on today? It is Halloween. It's October 31st, Thursday here in the markets, as we've had a decent downside press on the overnight session, along with the end of yesterday, due in part, well, probably a large portion of it, due to big tech earnings. So we saw that Microsoft and Meta, the largest names that reported yesterday, did see some significant downside here on the overnight as well as the pre-market session. So both of these names, right, Meta and Microsoft, did theoretically sail past analyst expectations with their quarterly earnings reports, but the big tech firms' guidance for spending or more AI spending has investors worried over the results of the heavy investments in the short term. So these concerns have dragged their shares nearly 4% before the bell on Thursday. You can see that this one, what are we down here on Meta? We're down about like 2%. On Microsoft, we're down, what are we down here? On Microsoft, we're down a little more. Microsoft like 4%, we can say. So Microsoft pulled down a pretty decent bit. Well, initially, the responses were a little more bullish from them, and then they got kind of banged up. So Microsoft has easily eclipsed the estimates with the Q1 results as its Azure cloud segment crushed its expectations. The AI-driven transformation is changing work artifacts and a workflow across every role, function, and business process, said the CEO. So the shares initially did rise, like I was saying, after the result, but reversed course after Microsoft forecast slower Azure revenue growth and the continued capacity constraints at the data centers amid surging demand. It also plans to continue spending heavy on cloud and AI to scale related infrastructure. Now, Meta shares also fell despite its Q3 earnings beat, which was tempered by traders' concerns that heavy technology spending would continue to pressure profits. We had a good quarter driven by AI progress across our apps and businesses, said Zuck, but Meta forecast a significant acceleration in spending on AI-related infrastructure in 2025. Zuck also acknowledged that this may not be what investors want to hear in the near term, but insisted that the opportunities are really big. Now, I do agree with him in that regard. I do agree, generally speaking, with the aspect that, yeah, obviously you do need to spend for AI to see some kind of growth opportunity there. I think that markets and investors were kind of leaning on something that had a little more backing about this AI spending. So we've seen this downside momentum, but I do truly like the upside potential and aspect for Meta specifically, and I think that and Microsoft is in the books as well. I think both of these, right, one settled down a little, and honestly, Meta's not really down that much after the earnings. But I think like once we have a little more of a settle, we're starting to see that pump and fluid market buying coming back in big tech, and that looks like a pretty nice opportunity here for that upside potential. And I think both of these look like decently opportunistic names. Now there are other things like, where did I just go into? SMCI. There are other names like Super Microcomputer. Now this one has been a roller coaster. So, huge day for Supermicro Computer as it plunged over a third in response to its auditor resigning. It added to the worries that alleged financial reporting and governance issues that have cast shadows on the popular AI stock since its all-time high about 122.90, which this was obviously this is after split. In mid-March, shares are now down 73%, finishing yesterday's trading session at about $33, gapping down a little here pre-market. So they're down about like 5+% coming into the pre-market move. Now, this one, on the other hand, it doesn't seem like the opportunity is similar to that of Meta and Microsoft, which are posting good earnings results. Also, they're posting, what's it called? They're posting progress with AI, maybe not the progress that investors want to see, but this is completely out of left field here where auditor resignations are rare but can happen for a range of reasons. In the case of SMCI, Ernst & Young was the second auditor that the company had in the span of 18 months, and in order to get things back in order, Supermicro will likely need to take action in these areas, otherwise the risk of suffering a fate of public firms that have found themselves in similar situations, which is aggressive downside momentum move. So one of the other names that actually kind of stuck out for me, and I'm talking about these individual names a lot here because I have a very big proponent on what's going on in big tech, and I do think that big tech, even post-earnings, post-election, post-FOMC, regardless of we have a bid or an offer in them, they become a very attractive component for the market movement to the upside going into the end of the year realistically. So another one is eBay here. I think eBay posted some pretty good results that were kind of overshadowed by a slightly slower Wall Street projection for the fourth quarter, I should say. So it expects Q4 earnings per share between $1.17 and $1.22, below the consensus of $1.22. The revenue guidance 2.53 to 2.59 billion. Which also missed the analyst expectations of 2.649. So initially, right, I think that the guidance miss in that, right, they bought back another 750 million during the period and has over $1 billion remaining in its authorization. I think that despite that forecast miss, you have a lot of positive things going for it. It looks fairly cheap realistically valuation wise. It tumbled here yesterday, last night, into about like $50. I think that was like a sweet buying opportunity. It's up now already. It probably will close the gap realistically. I think there's good opportunity in that, and then with that, I think that big tech also has a lot of opportunity. Even right, we've seen these downside moves here based on these earnings. I'll be watching for that kind of settling down to identify some kind of buying that comes into these over the next few weeks realistically. Now you can look at like big tech here with the futures in terms of the response from both NASDAQ and the S&P 500, because obviously this S&P 500 is fairly closely tied to the big tech companies, and we've seen some significant downside press over the overnight, but you can see the rally is trying to come in here on NASDAQ a little more, and I wouldn't be surprised to see some kind of buy side pressure that comes in on dips throughout the day to see if we can get that pump into the RTH session. Now naturally auctions are bearish right now. Below 58.35 area on the S&P, like there is bearish notation realistically. There is bearish auction. There's a bearish balance. Below that 520 area, there is bearish auction on the NASDAQ as well. So keeping that in mind, I think there are some dips that do get bought up, but we have to be cautious as prices move into some of these larger territories. You have this massive negative delta cluster here on the S&P around that like low to mid 30 area, which is going to be that very strong barrier to identify that sell side pressure on today's session, right? They're already starting to sell and trying to fail from that 20 area. But I have that huge pivot for the bear bull into that mid to low 30, which is an important factor. So I'm initially looking for these guys to try and pick up a bid, clean up some of this sell side, and then probably start offering into the later session. So that's all I got going on for today. I hope everyone has an amazing trading. We're just going to open up our live trading room and see how we can look at these things real time and see where the opportunity lies. We had a very nice buy side trade and momentum move from yesterday's session, so let's continue that momentum and take it slow and steady and see if these sellers really want to continue at higher prices. So I'll see you guys tomorrow to wrap up the week. We'll stream tomorrow, and I hope everyone has